India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, beginning a fresh new week. And dare I say, wo ghadi aa gayi.
Nicely put.
Why I'm reverting to Hindi, but it is going to be an interesting week. It's going to be an important week. President Trump, incoming president, becomes President Trump later tonight. Morning, guys.
Good morning. The US markets are closed today for a holiday, but I think there's going to be hectic action, right, as we look at that inauguration. And the promise of lots and lots of executive actions on day one itself.
Yeah.
So let's see how this goes. I mean, markets have been prime-footed. Actually, Asian markets are very nice and easy and sanguine about the whole affair. Yeah. But let's see, I think we'll deal with the reality as and when it happens.
Well, it's that, in the run-up to the two big heavyweights, China versus US is what it's being pitted about. And suddenly both of them decided to have a chat on Friday. So anything can happen. I think we're bracing ourselves for Trump 2.0 and don't rule out anything, so to call it.
Well, I think tweets or whatever, truth socials, thick and fast, right?
Crypto.
Executive orders on social media.
And he's keeping TikTok alive, so it seems. So, anything's possible here.
Absolutely. And I think, so that's the backdrop, right? I mean, the moment is finally here. Trump has waited 4 years, 4-year break, and Trump 2.0 starts today. The inauguration is tonight, 10 o'clock, 10 p.m. our time. And then there's an inaugural address as well, a speech basically, which is half an hour after that, which is about 10:30 tonight. And both will be closely watched. And I think, even before taking over, Trump presidency began in November when he was elected for all practical purposes, because markets have kind of traded Trump. Dollar has been higher, yields have been higher, markets have been higher as well. You've seen a fair bit since the election outcome till now when he actually becomes president. Buy the rumor, sell the news. That's one way to look at it. But I think, if what he does significantly disappoints, I think, you will get unwinds in many of these things. And we'll talk more about this as we go along, because it's possible that he disappoints in terms of the aggression of his actions and on tariffs, etc., etc. So that's the first kind of thing to watch out for. Now, the Wall Street Journal said that Trump is going to sign executive orders on immigration, energy, and government hiring immediately. So the three big ones that he's going to focus on. And from a market point of view, straightforward, energy, right? I mean, does it have a meaningful impact on energy prices straight away? Of course, he wants to increase energy output in the US. Immigration, the impact is, what he'll do, of course, will limit immigration one way or the other. Impact is inflation, and but perhaps that's longer drawn out. Energy is straightforward in that sense, at least in terms of something which is traded. Now, on Friday, Trump and Chinese President Xi were in communication. It kind of drove some strength in the CNH and drove the dollar CNY slightly lower, CNH slightly lower. And Trump has said that he's planning a summit with Xi Jinping, the Chinese president, in China within 100 days of taking over. So this is interesting, and this is important as well, because, the brunt of the big tariff increases that Trump has spoken about is all directed towards China, although everybody perhaps gets impacted, but no one more than China. U.S. equity and bond markets are shut tonight, but futures will be trading, other markets, Europe, etc., everything else will be on, and they'll all be kind of on headline watch in terms of what comes through. In terms of data out of the U.S., not very much. The U.S. Federal Reserve is in a blackout period ahead of the FOMC. So that's that. Now on Friday, in terms of price action, don't attach too much importance in the way the markets went in. Equities were higher. Nasdaq was up about 1.5%, and there was an IMF global growth upgrade, but that's largely primarily because of very strong US demand, and that's been the story all of this year so far. The 10-year was flat, 4.62. Dollar index was at about 109.35. So those are two other markets to keep an eye on. Now, Nifty on Friday fell after finding resistance at the 40 hourly exponential moving average, just tying in the levels. So I'm just going to quickly put out broadly, near very, very near term levels we are watching out for. Resistance for the Nifty at 23,391, which is the high. And support in that sense comes in at last week's low, which is 23,047. So that's broadly the very near-term range, 350-point range that on the Nifty perhaps one should trade. Nifty Bank resistance, similarly, the high is 49,459. And the support, of course, comes in at 47,898, which is last week's low. So again, as I said, these are near-term numbers. We'll have to keep an eye in terms of whether these ranges break. Last week was much more measured as compared to the week prior when we had absolutely crazy wild moves. Lots of earnings we will react to, and we will start talking about many of them like Kotak, etc. as we go on. But GIFT Nifty giving you a first sense of how we are likely to start. It's neither here nor there, about 20 points higher. Surbhi.
Absolutely. Guys, I don't know if you remember this dialogue from a popular Hindi movie or not. Don't underestimate the power of a common man. I'd like to change common man with the US president, especially when the US president is Donald Trump. So yes, I know Prashant has been saying that maybe, and I think that's been market wisdom, that maybe all of it finally peaks out today and you can get to some,
No, that's not what I'm saying. Just to make it clear, I think eventually he's going to do things which will drive dollar higher, yields higher. That's my broad view. But I think near term, right? Knee-jerk, for example, company results. You saw what happened with the Infosys, right? Stock was bid up into the earnings, and on last Friday, stock was down 5-6%. So I'm saying near term, you could have some of that happening, but that's very, very near term, tactical in that sense.
But let's see. I mean, so the headlines are always going to be absolutely interesting to look at, and one of the headlines that came in from the Washington rally on, I think it was on Sunday, was this: by the time the sun sets tomorrow, the invasion of a country will have to come to a halt. And, a lot of this, the expectations are that the orders on the first day could be ranging anywhere between 150 to 200. Reuters is saying 200 executive decisions. CNBC is reporting it could be, 50 on Monday, 100 on Tuesday. So take your pick, take your guess. But it's very, very clear that the first of those orders could have to do with immigration, including maybe imposition of that national emergency that he promised, specifically to crack down on the border with Mexico. So that could be the first shot he fires. We'll wait and watch. Of course, on the issue of whether he's going to be more pragmatic, I think some evidence is there. Like Nigel also mentioned, the phone call with his Chinese counterpart, the fact that he's looking to halt the TikTok ban, services have been restored. So maybe he'll do more one-on-one business dealings with companies and with countries. That's the hope with which the market's going into this mega event. Anyway, to talk about markets, Asian markets have actually taken over from the positive handover that we got on Wall Street. Wall Street had a roaring rally. In fact, not just on Friday, but for the week, Wall Street was higher. And Asian markets are building from that. There's good news that's coming in from data in China. On Friday, by the way, China came out with a slew of economic numbers, all of them looking very good. GDP up about, 5.4% for the fourth quarter and 5% for the full year. So they've managed to meet the expected range of 5% growth. This morning, the PBOCs actually left rates unchanged, which is a bit surprising. The one-year loan prime rate is 3.1%, though the PBOC is spoken about being, moderately loose with its monetary policy through the course of this year. So maybe, we'll see more rate cuts as we go along. The Bank of Japan meeting is happening later this week as well. And the BOJ is widely expected to raise rates. Today, we've got machinery orders out of Japan, and those numbers are ahead of estimates. So watch for this. Central bank action is going to be key, not just today, but over the next couple of days as well. For us, the Nifty has spent the entire last week in a consolidation zone. The good news for the bulls is that the Nifty protected the downside of the trading range, which is around 23,047. So they'll hope that there can be some build-up from there. However, obviously, the flows picture from the foreign institution side, that's not supportive. Again, on Friday, just to recap the numbers, we had selling of over 3,300 crores. It wasn't entirely, offset by domestic institutional buying, but clearly there's some retail buying, some HNI buying that's come back in the system, and the market's not hurting as much as it was at the start of last week. Lots of numbers to go over, and I'll start off with the positives over here. On tech, actually, both Tech Mahindra and Wipro have come out with very, very decent numbers. Tech Mahindra's constant currency growth is above estimates at 1.2%. Margin expansion is also in line to slightly higher than estimates. So Tech Mahindra has been looking good. On Wipro, the top line is flat for the quarter, and even their guidance is not, guiding for any kind of euphoric increase in the top line itself, -1% to +1%. But the fact is that the margin has expanded beautifully and above estimates. More importantly, the company's come out with a new capital allocation policy that could make shareholders very, very happy. They're looking to return more to shareholders, and so watch for this stock today. Kotak Mahindra Bank, pristine numbers, looking absolutely great. Lots of positive brokerage notes that we'll talk about as we go forward. Slippages have actually declined in an environment where one is worried about asset quality, and margins have also improved. Mr. Vaswani says that the credit cost is beginning to show signs of plateauing. Very good commentary, good numbers. Watch for Kotak Mahindra Bank, and leave you with some of the interesting results today. Lots of interesting mid-caps, actually. Dixon, L&T Finance, MCX, Oberoi Realty, Paytm, Zomato. Promises to be a busy day when it comes to a lot of the larger mid-cap earnings. But of course, so we have the big global headlines to go over as well.
Well, that's right. In the next few days, we'll be keeping a very, very close eye on the yields as well as on the dollar index, because they have seen a bit of a run-up in anticipation of President Trump taking office. So that's going to be top of mind. But I'll tell you what, if it wasn't, it wasn't Trump that was going to come, was going to be the key talking point in the next 24 hours, today would have actually been a rather good trading session. I'll tell you why, because both the pillars of the market, they have some support. On Friday, we had a couple of earnings disappointments, both from the banking as well as from the IT pack, and that's what hurt sentiment. Now, over the weekend, actually, you have positive numbers that's coming through. Kotak Mahindra Bank, good numbers, valuation-wise as well, the stock is fairly, attractively priced. And the other couple of IT numbers as well, there was more good than bad. So otherwise, you'll have both the pillars of the market that would be seeing good amount of buying. On Friday, we did see that because of the numbers that came about, both the pillars of the market actually got a bit of a dent. But let's keep an eye out on both these two. And it appears that today, actually, because of these numbers, we could see a positive rub-off on both banking as well as on the IT pack. What do the FIs do? No surprises. They added 30,000 short contracts. They continue to remain net short, close to 84% of their positioning on the short side. And I'd made this point even last week that now the FI net short positions and the client net long positions, they are getting to the highest we have seen all the way since, that recent low, which was on June 4th, which incidentally was the counting day. So that's going to be important mark. Just take a look at the similarity. We're almost there. And even on the net short positions, we're almost there. Normally, when the FIs go aggressively net short and the clients go aggressively not net long, history suggests that this combination normally results in some kind of a near-term bottoming and, in fact, a bounce. So let's keep an eye out on that data point as well. Options data, 2 strikes come up for you. The 23,200 call, well, that was fairly active, 21 lakh shares getting added there. And the 23,000 put as well, close to around 10 lakh shares getting added out there. And just going at the options premium, 200 rupees is approximately the premium on the 23,200 call. So that's telling you the 23,400 mark, that's where the bears will want to fight for. They'll want to protect that level on the upside. And on the downside, the 23,000 mark becomes an extremely crucial, support. The Nifty Bank, well, that's been moving all around. Friday's trading session as well, it went in soft. The recent low, that's the line in the sand, 47,800. You don't want that mark to get breached. And on the upside, 50,000, 50,200 seems to be a bit of a resistance zone. So, you could see some kind of buying today because both the pillars of the market are doing well, and even Reliance Industries as well as ITC, they have found their form.
All right, Nigel, we'll keep an eye out on many of these names as markets start to trade, and we straighten through the rest of the week as well. Matt Orton is with us, Chief Market Strategist at Raymond James Investment. Matt, good morning. Great to have you with us here. Thank you for your time. Again, it's like a cost of a toy, right? Whether he'll go big on day one, or whether he'll stagger some of his actions over the next many weeks. What's your sense, Matt? I'm talking about Trump, just in case you're confused.
Of course, yeah, I assumed as much. Good morning. Always great to join you. Yeah. And I don't even think it's a coin toss. I think he's going to go big or go home. I think that's how Trump acts, and I think that's what everybody is expecting. We're expecting to see, 150, 200 executive orders over the next 2 days. I don't expect those are going to be drawn out, and I actually think they're going to be very informative and hopefully will help bring down some of the recent volatility that we've had in the market. So much of the backup in rates that we've had in the US, really since the election, has largely been the result of expectations, speculation around what Trump policies might do to the inflation and the growth backdrop in the United States. And I think we'll get a lot more clarity with respect to what that's going to look like. So I actually think it's going to be encouraging progress. Plus, you have the backdrop of a very strong earnings season so far that's taking place in financials. I think we're going to continue to see that play out. So my expectation is that we're going to see a little bit more normalcy, hopefully a bottoming, moving through time and consolidation, maybe a slight uptrend starting to develop again. But I'm optimistic that the clarity we'll get will help markets settle and be able to build a base on which they can rally.
Okay, all right. Matt, hi, good morning. So you are, holding on to hope, being optimistic. Let's talk about India, because how do we sort of deal with all of this? There's been the rise in the dollar, the weakness in the Indian currency, and then, of course, our own issues around the slowdown. You've usually been very optimistic in the Indian market. So the last couple of weeks, have you been nibbling in or staying on the sidelines? What's the call?
Yeah, good morning, Shirley. It's been tough. It's been a tough drawdown. It's been almost 12% down from the top. I've been nibbling in companies as the market's been going down, which has paid off to a large degree, especially in high quality names. We've talked about some of them, financials and autos like ICICI and M&M. I think there's a lot more opportunities. I built a position in Bharti Airtel, which is another very high quality asset, a good compounder with respect to its growth, free cash flow going forward. So I think there are select opportunities. What I would caution investors right now is we're kind of in technical no man's land. It's very tough given a macro backdrop that has a lot of volatility, especially one that's a little bit more sensitive to currency movements and an overall just growth question mark. I would be careful. I would rather be a little bit later and make sure that some of the technical trends are confirmed if I'm looking to get into names I haven't been in before, or if I don't already have an established position. I'm comfortable giving up a little bit of that upside. I'm still very constructive on the overall macro backdrop for India. It's still my largest country overweight outside of the US, but I've been reticent to add too much more right now until I know where the dollar is going to go. And I think if we see a bottoming in the strength of the dollar, at least for the near term, that's going to give investors some time to pause, for the market to rebuild the technical foundation, and then hopefully we'll continue to see some good earnings from Indian companies. And I think that will be the mark to start to see some more upside.
Indeed. Hi, Matt. Morning. That dollar index cooling off is something that the bulls out here will be hoping for. And in the last time around, actually, the dollar index cooled off. Once he took office, it ran up ahead of that and then it cooled off. Matt, I wanted your view on this. The Trump having a conversation with the Chinese ahead of this big event. What if he doesn't do what people expect him to do to China? Do you expect some money to flow towards China then in that case? And that could, in fact, be a mild negative for India. Do you see that happening? Or do you believe that India still will be top bet?
Yeah, Nigel, Jill, it's a very interesting point. And I think that goes to my somewhat contrarian view that I don't think tariffs are necessarily going to be as bad as many investors are expecting. I think this overture to China, inviting China and Xi Jinping to the inauguration, I think it's an olive branch for what we're still going to see some fairly serious tariffs enacted at the very beginning, but hopefully it's a position to show that Trump is very serious about negotiating and coming to a better place in a short period of time. And there's a lot of things going on with TikTok, some very important restrictions that have been put on Chinese tech companies more recently. So there's motivation from Beijing too. And I don't necessarily think this time around it's going to be all flows going back into China. I think what it will show is it's going to be broader perspective for how Trump is going to approach tariffs. And I think that might give investors who are looking to diversify overseas more confidence that perhaps the worst assumptions of tariffs might not necessarily play out. So I think it'll give a little bit more confidence for investors to start wading into emerging markets, some international developed markets that have been beaten up, that look like they're trading at a very big discount, like India right now.
All right, Matt, hope to speak with you soon again. Thank you very much for joining us. It's a pleasure, and really appreciated your thoughts on CNBC-TV18. Well, we'll just quickly tell you what's lined up here in terms of interactions over the next 2.5 hours, as always. So you'll hear from the Wipro management after the third quarter performance at 8:35. 9 o'clock, we'll be joined by the management of NetWeb Technologies. We talk their third quarter numbers and outlook. 9:20, Pankaj Tibrewal of Ikagai Asset Managers will be our market watch of the day. Commentary in terms of management lined up. So Canfin Homes will be talking to us about the outlook that they see in their business. We'll have the CFO of ICICI Lombard after the third quarter results. Indian Hotels reported a good set. That's coming up at 10 o'clock. And at 10:15, you'll hear from the management of Bank of Maharashtra. So that's the lineup here all the way till 10:30.
Okay, all right. Well, we'll slip into a short break. On the other side, we'll focus on our top 10 stocks. For the time being, I'll give you a brief idea about the list. We have Kotak Mahindra Bank, Tech Mahindra, Wipro, Indian Hotels, Canfin Homes, ICICI Lombard, L&T, GMR Airports, as well as Hitachi. All of them will be reacting to positive news flow. While we have RBL Bank, that'll be the lone one that's likely to react to negative news flow over the weekend. Stay with us. We'll get back for more.
Welcome back. Asian markets have been, largely in green territory so far, and the expectation is that we'll probably start in the, in the positive side. Lots of stocks to go over as well. There you go. There's the picture across Asia. The Chinese and the Hong Kong markets are actually the best performing. And the implied open is suggesting that we'll start probably 18 to 20 points higher. So what about individual stocks? A ton of earnings to go over, all coming after market hours. So let's straight away get to it. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, happy Monday to all of you. Let's start, with some of the positive results. And I guess Kotak Mahindra Bank could be topping that list. Abhishek.
Well, Kotak Mahindra Bank, reported a better than analyst estimate on various parameters. So take a look at the net interest margin. It actually expanded sequentially by 2 basis points, while analysts were expecting it to decline by 5 to 7 basis points on a sequential basis. The slippages have also improved on a sequential basis. It's come down by 11.5% in absolute value. However, analysts were expecting slippages to increase by 200 to 300 crore on a quarter-on-quarter basis. Asset quality, the gross NPA is largely flat at 1.5% versus Motilal Oswal estimate of 1.56%. Their business momentum has been pretty better than what analysts estimated. So deposit growth was nearly 16% YOY, while Motilal Oswal estimated at 15%, and their advances growth was at 15% YOY, while Motilal Oswal had an estimate of 14% YOY. So strong core operating profit, that is operating profit ex of treasury, about 11.5% YOY and 4% sequentially. What's not worked in the results is the two key subsidiaries who have seen their PAT decline both YOY and quarter-on-quarter, that is Kotak Mahindra Prime as well as Kotak Mahindra Investment. With reference to the P&L, both the NI and PAT is a beat on our poll. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. So a positive outcome for Kotak Mahindra Bank. But Rima joining to tell us about the tech majors, Tech Mahindra and Wipro. Rima, how were they?
Well, let's start with Wipro. One, the quarter was good. It was a beat on revenues and margins. The second positive was the company has revised the capital allocation policy higher. They're now committing to paying out 70% of, the free cash flow. But that said, the Q4 guidance is very unexciting. So that's the summary of Wipro. Getting to the numbers, constant currency revenue growth for the company came in at 0.1%. EBIT margins in 17.5% is ahead of expectations, the highest in the last 3 years. And the company, and this is after the company absorbing a wage hike impact. So that is a positive. That said, the Q4 guidance is at -1% to +1%. So after a decent showing in Q3, the street would have liked to see some acceleration in Q4, but that is absent. Now coming to Tech Mahindra, again, the quarter is good. It's a beat on revenues, it's a beat on margins. But here analysts point out that while it's a positive step under the new management, we're seeing the right baby steps. If the company has to reach its goal that by FY27, the company starts beating industry growth rates or even matches up to it and expands their margins, it's still a very tall ask. That said, just going by the Q3 numbers, it's a beat. Revenue growth at 1.2%. Margin expansion is positive. It's come in at 10.2%, and it's been rising for the last couple of quarters. The company in the conference call says that calendar year 25 should be better than calendar year 24. But as I said, it's a step in the right direction. It's a good quarter, but a lot more needs to be done to match up to the industry by FY27.
Okay, well, Rima, thank you very much for that. We'll come back to you for more. But at 8:35, we have from the management, the CEO, CFO, and CHRO at Wipro talk to us about their business going forward. Well, let's talk about hotels now. Indian Hotels, the #1 hotel company in the country, reported numbers. Mangalam is here with a quick snapshot view. Mangalam, morning.
Good morning. So the third quarter is seasonally the strongest quarter for the hospitality industry, and if the leader had to report numbers, it had to be better than the industry. That's exactly what has happened. 11 consecutive quarters of record performance coming in for Indian hotels. Growth has been supported further by the consolidation of SATS and the other new businesses itself. So if you just look at the reported numbers, the revenue for the company on a consolidated basis in the third quarter grew by 29%. And typically the EBITDA grows higher than revenue when things are doing well. The operating leverage kicks in. Margins at 38%, EBITDA growing 31%, and the net profit growing by about 33%. Just giving you some internal details that tell you the quality of the numbers. There has been a 40% increase in new businesses, 13% growth in same-store hotels, and 20% growth in the US portfolio. Management fee, which is typically ROCE accretive, had about 32% growth out there. Average room rate increased by 11% and occupancy above 78% as well. The company signed 55 new hotels and they are on track for delivering double-digit growth in the fourth quarter, led by higher wedding dates and multiple events.
Okay, all right, got it. So looking good for Indian hotels. Thanks for that, Mangalam. By the way, at 10 o'clock, we will be chatting with the management. Mr. Puneet Chatwal is going to be in conversation with us. We'll talk about not just the third quarter, but of course, the outlook ahead for the company. That's Indian hotels. Let's get to a couple of financials now. Abhishek is back to take us through Canfin Homes and RBL Bank. Abhishek?
Well, RBL Bank was expected to be, weak with reference to the Q3 FY25 performance, but it's much weaker than what the analyst had pegged. So a PBT loss, that is profit before tax loss, for the first time in last 14 quarters is what you have seen in the PNL. 14-quarter high slippages, they are now at 1,309 crore versus 1,026 crore. 13-quarter high annualized slippage ratio of 5.8%. That's pretty high. Net interest margin is at 8-quarter low of 4.9% versus 5% in the previous quarter. Now, quarterly credit cost has been at 1.39% versus 0.8% in the previous quarter. Hence, the return ratios have got impacted. 14-quarter low with reference to the return ratios, ROA at just 0.09% and ROE at just 0.84%. So, for 22 quarters in a row, they have had an ROE of less than 10%. With reference to the PNL, both the NI and PAT is below our poll. Now, Canfin Homes, they are weak, but they were expected to be weak given the fact that registration office in Bangalore for real estate has been closed, and they are also facing issues in Hyderabad, which the management has been speaking about. So disbursements are down 0.02% YOY and about 21% quarter on quarter. AUM growth is at 9.1% YOY versus Motilal estimate of about 9% YOY. Net interest margin, they have declined by just 2 basis points sequentially, but it's interesting to note spreads have improved by 15 basis points on a sequential basis. Asset quality largely intact. Gross NP ratio is at 0.92% versus 0.88% in the previous quarter. Back to you.
Thanks, Abhishek, for that. We'll also be connecting with the management of Canfin Homes Management at 9:40 a.m. We'll discuss the past quarter's numbers and their way ahead as well. The next one on our radar is ICICI Lombard, very volatile ahead of its numbers. Vamakshi, how are the results?
Well, it was a good set of numbers coming in from ICICI Lombard. Net earned premium saw an uptick of almost 17% year-on-year, coming in at 5,045 crores. They've incurred their incurred claims ratio stood at 65.8% as compared to 70% on a year-on-year basis. This is lower than what the street was expecting, so that bodes well. Underwriting losses also narrowed to 152 crores as compared to a loss of 283 crores. Resultantly, the combined ratio improved by almost 90 basis points to 102.7% as compared to 103.6% in the same quarter last year. Operating profit resultantly saw a very strong uptick of 65%, coming in at 685 crores, and the net profit too saw a very sharp surge of 68% on a year-on-year basis. So overall, a good set of numbers for ICICI Lombard.
All right, and again, you'll hear from the management of ICICI Lombard. Gopal Balachandran, CFO of the company, decode their performance for us. That's coming up at 9:50. L&T and GMR Airports next in focus. Vivek is here with details. Vivek, morning.
Well, good morning. That's right. An important order win coming in as far as L&T is concerned. So, UAE energy company known as Masdar has actually gone ahead and selected L&T as well as a Chinese company as preferred EPC partners. This is for a mega renewable energy project in Abu Dhabi. Both of these companies are EPC partners. This is for a solar PV as well as a battery storage giga scale project. World's first large-scale, round-the-clock giga-scale project, and the per-day output of this particular project is going to be 1 gigawatt-hour. This particular news has actually come out on the website of the UAE Renewable Energy Company. L&T is yet to put out this particular development onto the exchanges. We reached out to the management of L&T. They, at this point of time, refused to comment. They are still awaiting certain details before they can go ahead and give it to the exchanges. The other stock on the radar is GMR Airport. December business update is something that has come about. December passenger traffic is up almost 9% on a year-on-year basis, up 6% on a month-on-month basis. The aircraft movement is up 7% on a year-on-year basis and 5% on a month-on-month basis. Along with that, the company has also gone ahead and declared that there's a creation of encumbrance towards pledge for a particular facility of the company. This is for close to 17.8% of the total shares of one of the promoter enterprises known as GMR Infra Enterprises. So both of these stocks in focus today on the back of news flow.
Okay, all right. We'll keep them on our radar. Vivek, thank you very much for that. Let's move on. Vamakshi is looking out for some news, in connection with Hitachi Energy. Some fundraising about to happen, Vamakshi?
Well, absolutely right, Sudhbi. Going with the green for Hitachi Energy on the back of this news flow itself, the company has said that the board has gone ahead and approved its fundraising plans via equity shares, QIP. They will be considering several modes. In fact, they will be raising up to 4,200 crores in one or more tranches. Now, keep in mind that back in October, the company had said that they will be investing nearly 2,000 crores worth in India itself in order to mark, 75 years of business in India. So a part of it could be used probably to fund this sort of capex. But apart from that, it'll be important to monitor when this fundraise actually comes through and the utilization of the proceeds. So overall, it's a green for Hitachi Energy.
All right, got that. Thanks very much, Vamakshi, for that. Let's quickly recap our list of top stocks to watch this Monday morning, the ones that have positive news flow around them. Kotak Mahindra Bank, Tech Mahindra, Wipro, Indian Hotels, Canfin Homes, ICICI Lombard, L&T, GMR Airports, and Hitachi Energy. RBL Bank is actually the only stock on our list this morning that could actually open in the red on the back of really weak numbers. That's the equity list. Let's now go across to Manisha Gupta to find out how the commodity markets are doing and perhaps how they are gearing up to welcome in the new US president. Manisha, morning. What are the headlines?
Morning, and thank you for that. So we will absolutely, ahead of that Trump inauguration, we're looking at dollar index easing a bit. And even with that, there's no support really to commodities. So after last 3 and 4 weeks of constant gains, crude oil prices put 4 weeks of gains. But we've started on a flat note today, slightly on the higher side as the markets will try to understand the sanctions impact on Russian oil tankers and oil companies. So that is something that the street is worried about. But apart from that, China also keeping its prime lending rate unchanged is what the metals are digesting right now. And remember, markets are focusing on Trump's plan to raise tariffs, tighten immigration, lower taxes, ramp up deregulation, and there's various other things. So the markets were in any case subdued, but add to that the fact that the U.S. markets are closed for the Martin Luther King Jr. holiday as well. So that also adds an impact in sense of a lot of people keeping away from the markets. In Asia right now, we are looking at lower volumes and very steady moves. The decline actually has continued in case of metal prices. So copper is down by a percentage point. Zinc, aluminum also opening 0.25% to 0.5% on the weaker side ahead of Trump inauguration.
Okay, all right. Thanks a lot for that, Manisha, for giving us that neat wrap. Well, let's focus on stocks. We have Prakash Thiban, market expert, who joins in. Hi, Prakash. Morning. Quickly, if we could ask you about Kotak Mahindra Bank, a relative underperformer, valuation-wise, not too expensive in comparison to history. And also now, in fact, in a difficult environment, numbers look good. Your take on the stock?
Good morning, Nigel. So you're absolutely right. In fact, I like the numbers. When you hear the management on some of the parameters that otherwise would have seemed worried, they're very clear, a conscious attempt by the bank to keep its net assets, net non-performing assets to be in a particular tight band. And that usually has been followed by the bank every time they have lunged for growth in the subsequent quarters. So my sense is they're trying to time their credit growth, their expansion of the book, with the interest rate softening, and that could happen probably as early as first quarter of 26 itself. So look at the numbers from a slightly longer term perspective, and you'll probably see that they are probably at the best. The profits have increased in the last 3 years. The stock hasn't gone anywhere. but this is where it's poised to kind of start making a big difference. So relatively, when you look at Axis, when you look at some of the other banks, you feel that Kotak is probably better placed, and the subsidiaries have contributed so well. So there's definitely, that's where the profits coming from significantly. My sense is the core banking area will also kind of start contributing while consciously expand on the book side.
Okay, all right. Prakash, stay on. Lots of earnings to go over. We'll come back in just a bit. But let's look at Wipro now, which reported a good set of numbers for the third quarter. The tech giant has beaten its quarterly guidance after a long time. Rima caught up with the management to talk about the Q3 performance and the outlook. Take a look.
We have given a guidance of -1% to +1%, and that's based on the current visibility that we have for the quarter. Having said that, as in quarter three, I think the team has come together. There has been a significant rigor into execution, helping us with both on the top line and also on the margins.
But what led to the beat in your Q3 numbers, Srini? You were expecting a 0 to -2% kind of growth. That's the visibility you had 3 months ago. What changed?
It's a combination of winning some deals that are quick wins that also helped us to grow in the quarter. There are certain segments that that have also helped us grow, especially starting with the healthcare and banking and financial services. But I would contribute a lot more in terms of how we were able to execute in quarter for ourselves.
Aparna, margins are the highest that we've seen in the last 3 years, and this is despite you absorbing the wage hike impact. So can you explain the margin performance for us, and where did the beat come from?
So the beat came from improved execution rigor, both in our core businesses and in our consulting business. The core IT business also improved. We're continuing to sustain utilization at an all-time high. Offshoring mix has improved. So it's a mix of both traditional levers that are there and also some of the specific actions that I've spoken about even in the past quarters. We are continuing to optimize our non-client facing roles in G&A. We are optimizing our overheads. All of that has paid out. And secondly, even in our recently acquired consulting entities, we're seeing a bounce back, both in terms of revenues and in terms of margins, and that's also helping. So a lot of it is a result of improvement in operations because of better execution rigor.
Got that. Saurabh, headcount has declined for the second consecutive quarter and attrition has picked up. What can you guide on the hiring front and what led to the decline in headcount?
So, Rima, headcount is a seasonal thing. We onboarded lesser freshers towards holidays through the last two weeks of the quarter. I don't see that as a challenge as we move forward. We will be okay on that. Our hiring guidance, we have called out, we will continue to onboard between 10 to 12,000 freshers every year. We would, for this fiscal, do around between 9 and 10,000, and for next fiscal, we want to look at between 10 and 12,000. That's what we intend doing. The good news is that we have been able to clear all backlog of all offers which we had made in the past. We have honored our commitment and onboarded all those people. That was a big overhang, and that's done. So both on the attrition front, let me tell you that whilst the trailing 12 months has gone up this quarter, the net new resignations are coming down, and we will see a decline on attrition as we move into Q4. So given that we have done our wage hikes on time, we're giving promotions on time, our variable payout is more than 90% for the last 3 quarters, I think we are in a good position from a hiring and attrition standpoint.
Srini, capital allocation. You've revised the capital allocation policy higher. What went into that decision? What made you think the time is right for you to go ahead and up it to 70%?
So maybe I'll let Aparna speak about that. Over to you, Aparna.
Yeah. So Rima, we've had free cash flow generation, which is upwards of 130% even year to date. We had a very strong cash flow generation for the last 2 years. Our cash is at an all-time high. and we felt this was the right time. We also laid out our strategic priorities, and we are very clear that we are now ready to increase the committed payout levels, and therefore we have done that. We've also announced an interim dividend of rupees 6 per share, which is substantially more than what we have done in the past. So increased capital allocation and increased dividend quantum.
Srini, can you talk to us about the discretionary demand? In which verticals are you seeing a pickup, and what has changed in the last 3 months? And when do you expect discretionary spending to become a little more broad-based?
So at this point in time, the way we see it, a lot of budgeting processes going on with our clients across, January being the beginning of the year. Having said that, and if you look at our current pipeline, and if you look at the story around Capco, we see the discretionary spend coming back, but slowly. In terms of the specific industries, I think, banking, financial services is definitely right there. And, typically, if you have seen, when the discretionary spend comes back in banking and financial services, other industries catch up. I think, that's what we are waiting and watching at this point in time.
And what about margins, Aparna? 17.5%. You spoke about a lot of traditional levers, improved execution, which drove the margin performance. But can you sustain and build on margins from here on, because you're at the aspirational level? Or would you like to revise your aspirational margin guidance now higher?
I think there is certainly a need to increase the aspirational margins, given that we've achieved 17.5% that we laid out a few years ago. It's good to be in this place. It has been accomplished, with all the right investments being made in our people. Saurabh spoke about it, and that's what makes this even better. As we get into Q4, we feel confident about holding these margins in a narrow band. And after that, it's a set of factors. Hopefully the revenue environment improves, and we also need to invest for the growth.
Very confident sounding top brass at Wipro, talking about some pickup in discretionary demand, though they're saying the pickup is a little slow. But on capital allocation, the street should be happy with the fact that this huge pile of cash they're sitting on, they're willing to share more of it with shareholders, and that margin performance has been really sublime, all of it coming through via better execution. Prakash, very quickly before we hit the break, Wipro, 281 on the stock, end of trade on Friday. What's your call?
So very good numbers, agreed. And you must give it to the management to be able to turn things around on an operational basis rather than just some new deal wins adding to this improvement. So, yeah, but I would definitely like to see the overall environment improve, and then, Wipro take part in that. So let's wait just 24 hours and things could be very clear for IT names. But yeah, it does stand out as one of the best, earnings of the season till now. Let's look forward to this quarter also going well, and then you could take a call.
Okay, all right, got it. Prakash, stay on. Lots of other stocks and earnings to go over as well. We do have to take first a break on that note. Come back on the other side, and the conversation with Prakash will continue.
Welcome back. Hope you're having a good morning. Well, Prakash Diwan is still with us. Prakash, let's speak about the banking number that will grab attention, probably for the wrong reasons today. RBL Bank. Very, very disappointing numbers. The stock has been a big value eroder, but the numbers are even weaker than what the street was anticipating. Your view on the stock?
No, absolutely. See, what happened is the previous quarter you had the Bajaj Finance disengagement impacting it significantly. And then this time it's microfinance that's just started, rearing its ugly head. So this is a bank which needs severe repair for sure. They don't have the distribution strength to quickly grow in terms of assets which start making percentile, numbers look better in percentile terms. But my sense is they still don't have a very decisive leadership and plan to kind of go ahead and spread themselves into the right pockets, newer segments and all of that. So there's a lot of struggle. Of course, the market sensed this coming. So in a way, it's already lost a lot of ground. Today's reaction could probably be again a bit negative and knee-jerk, but it probably doesn't have much to lose from here, is my sense. It's probably close to the bottom, if not to the bottom. So let's look at that reaction first. But yeah, there's nothing very positive to look at the bank at this point in time in terms of buying into it.
Okay, all right. Let's talk about a couple of other names then. Hitachi Energy. The stock had a one-way run because the hope that, in fact, the big orders are going to come in. And that's started seeing the light of day. Now they're talking about raising some capital. I think the parent already has close to 74-75% stake in the company. So they have that leeway in terms of raising equity. Your view on the stock?
Very well placed kind of a name, Nigel. As you said, great pedigree, it's sitting in the right spot. But at the current valuations, it doesn't really leave much of a re-rating potential. They'll continue to do well. In fact, they will have to do well to justify where they are. My sense is smaller companies in that value chain where, which are yet to be kind of reaching scale and operating leverage, that's where things will start kind of contributing more. So I would celebrate the numbers that things have started looking up. The parent will continue to get that order flow in. But I wouldn't want to buy at closer to 13,000. It's definitely very expensive in that space.
Okay, all right. Prakash, stay on. We'll take another quick break, come right back and discuss some more stocks. Also, we'll have Mitesh Thakkar and Sudarshan Sukhani join in. We'll get the technical trades going as well.
Welcome back. You're with us here on Bazaar Morning Call. 9 minutes to go for the pre-open session to kick off. Mitesh and Sudarshan are with us with what they'd want you to do in terms of this morning and beyond. Gentlemen, good morning. Great to have both of you back in the program. Interesting week it is going to be, Mitesh. And we'll only really know tomorrow morning the full impact of Trump 2.0. But how are things looking here? On Friday, markets sold off from hourly averages, came off a little bit. The week itself was a little ranged, at least at an index level. So what's the trade?
So, Prashant, two things. One, I think, last week after breaking below 23,350, there were two attempts when the market wanted to recapture that, but kind of failed on both the occasions. I think till that level is captured, I think, we will see the market slightly being under pressure. And the reason is that the weekly charts are still on the negative side. So the medium-term trend is, to me, I think, is slightly negative, which means that bounce backs will face a lot of hurdles at the supply pivots. And unless until they are being captured, I'm not looking at a big reversal happening. So in that sense, I think, my belief is that we might be choppy around this 23,350, 23,100 zones. But in case we start breaking to 23,100, then we can see another leg of decline, which could see the index test 22,800. Similarly, the bank nifty structure is also weak, and looks very likely that we might head towards 47,400. In the worst case scenario, 46,500. So in that sense, I think, till we see some reversal or concrete breakouts on the upside, I wouldn't be in a hurry to take longs.
Okay, all right, got that. Mitesh, stay on. Sudarshan, morning to you as well. So index, let's start right there. Any trades given the consolidation that we saw last week?
Yeah. See, what is happening for the index is that the Nifty itself is underperforming the world markets. We are trying to rally and then failing to rally every time we see resistance, although those resistance levels are coming down from 23,800. Now the resistance zone is somewhere around 23,350, which is exactly what Mitesh was also saying. So till that resistance is not overcome, the market is in either a downtrend or a sideways choppy mode. In either case, there is no trade. You don't want to go short. The world markets are much better, at least in the short term. So it's not a good idea to take a short position. You can't go long because we haven't even crossed the smallest threshold of 23,350. So the trade is a little choppy on the Nifty. It may be a good idea to either avoid it or to buy the Nifty closer to 23,100, which would be your stop loss. So those are the two options. Do nothing, buy on a dip with a stop at 23,100.
Okay, all right. So those are broad index views. Sudarshan, good morning. What would your specific trades be?
Yeah, good morning. The specific trades are all on the long side. Maybe we are starting a new week, so that makes it a little cheerful. BEL is a buy, the stop under 275. There's something else. A lot of these small cap and mid cap stocks are giving signs that at least for the short term, they may be bottoming out. Hind Copper is a buying opportunity with a stop under 240. Chambal Fertilizers, which fertilizer companies have been doing rather well, is a buy to stop under 490. And finally, MCX is a buying opportunity to stop under 59.70.
Okay, got it. Mitesh, morning. Stocks that you're going with today.
Yeah. Good morning, Survi. I have more of buy calls. A buy on Adani Ports with a stop at 1140 for targets of 1200. A buy on Hindalco with a stop at 609 for targets of 640. And a buy on Indus Towers. It's a conditional buy. Needs to break about 365, 366, and I think it closed around 363. So buy about 366 with a stop at 359 for a target of 380. And Dr. Reddy's is a sell call. Keep a stop at 1329. Look for targets of 1250.
Okay, all right. Mitesh and Sudarshan, thank you very much for those setups and, of course, those individual trading ideas as well. We'll come back to you for more. We take a break here. We are back with the pre-open rates in about 4 minutes or so. We'll also have the management at Netweb Technologies as we discuss their third quarter earnings and more. Stay tuned.
Welcome back. Well, lots of companies on the radar on the back of earnings, and we have one such company joining us now. Netweb Technologies also came out with numbers. The company posted a pretty strong growth for the third quarter. To talk about this performance going forward, let's welcome in the company's management. Sanjay Lodha, Chairman and Managing Director at Netweb Technologies, is joining in. Mr. Lodha, good to have you on. Thanks for being with us. You know, it's not just this quarter. I think colleague Rima was mentioning that if you look at the 9 months performance, you've been growing well above your guidance. I think the growth is now touching almost 30%. So first question, are you looking to increase the guidance for the full year for FY25?
Yeah, actually, telling you, it has been a very good quarter for us, actually, really, because basically this was a record quarter in terms of basically revenue as well as in terms of PAT also, because we did around 333 crores or 334 crores approximately in this quarter. If you see basically in this 9 months, we have surpassed the last year's 12 months complete business. And actually, it has been a very good quarter. And basically, all of our sectors really performed very well. Basically the supercomputing, the HPC area, and the private cloud and HCI and the AI, and all these things have been performing very well. And there is a lot of basically, we see a lot of momentum in the market and all the major sectors, because as you know, all these three sectors bring more than 90% of my business. So definitely we feel that we will definitely be maintaining the guidance which I have been giving you, 30 to 35% of CAGR growth. We are very, very confident that we'll be able to cross it.
But sir, why are you maintaining it at 30 to 35% when 9 months you've already grown at 60%? Why not increase the guidance?
The thing is that basically this is a very, you can understand that my customers are very high-end enterprise and large government actually. So what happens is that basically this business is a very, very predictable and a very mature business. And basically you cannot really judge it on basis of quarter to quarter on quarter basis. We normally, what we do is that we understand this business primarily based on the complete year-on-year performance. So I have been guiding somewhere around 1,000 crores of turnover this year. I will still keep on guiding around that only, because basically, but as you see, we have a very robust pipeline. We executed the Vikram Sarabhai Space Center order, very, very prestigious order for the country this quarter. And basically still we have an order book of around 360 crores. And basically, so I feel that 30-35% growth, if you see, my performance has been very consistent, ma'am. If you see over last 8, quarters. I think this is the 8th quarter since we went public, 7th or 8th quarter. Basically, it has been very, very consistent. So basically, we are a company which will try to focus and will like to commit only what is possible actually.
Sure.
And that is the kind of assurance I'd like to give to the market.
No, Mr. Lodha, I'll have to push you on this point. You've already done 734 crores in 9 months. For you to hit 1,000 crores, you need to do around 266 crores. So are you telling us that Q4 revenue will be as much as Q4 revenue last year? You'll have to deliver an absolute flat revenue number to hit that 1,000 crore. So no growth in Q4?
You caught me at the wrong place, actually, telling you very frankly. But definitely there is a growth in Q4 for sure. But
Okay,
basically, we will like to guide is that 30-35% of CAGR year-on-year growth will be kind of thing which I like to guide you still.
You want to be conservative.
So you're being conservative, and then you want to surprise the street, it seems like. But mathematically, it appears you have to grow, so we'll take that on board. Let's talk about the hot topic, which you briefly mentioned. AI, that's emerged as one of the key drivers. It contributes roughly around 14.5% in the first 9 months. Where do you see this number headed to, and what is the pace of growth you're looking at in the AI business?
Yeah, so basically AI business, if you remember around a year back, it was only 7 to 8% of my business. Currently, it is around 15% of my business. So I personally feel this will, because you see all the other areas are also growing. So I personally feel that this will be around 15 to 17% maybe going on forward. And basically by the next year end, we feel this should be touching around 20% of my business, because we are seeing a lot of momentum, lot of basically initiatives coming in. India becoming the AI factory is almost all basically very clear. The way the focus is coming from the government side, the way the focus is coming from the industry. So basically everybody wants to really adopt more and more AI practices. And basically, the relationship which we have with NVIDIA last in the India AI Summit, actually Jensen Huang himself personally endorsed the design. So we are basically a manufacturing partner for NVIDIA, wherein basically we design the boards and we manufacture using the latest design and architecture. So the latest architecture on GB200, that will also being currently been designed, and we will be time to market along with the worldwide market, and we'll be among the very few OEMs in the world who will have a complete running product ready there. So so AI is definitely will be one of our pillars of growth.
No, I remember that. I think the head of NVIDIA, the India CEO also mentioned NetWeb, and you were one of the few brands up there on the stage when Mr. Huang was here. Mr. Lodha, good morning, Prashant here. So could you just give us a sense, in terms of at a net level, you'll do about 100 crores in profits this year?
Yeah, we will, I'm sure that will cross the 100 crore ballpark figure this year in profits, actually. We are already around 71 crores approximately, what I remember.
And you'll do about could you do about 130, 140 crores next year? Net? FY26?
I will maintain that I will keep my growth momentum at 30-35%. So I think that's the best part. Let me keep up with that, because you can understand that it's a consistent performance, and we are not a company which will grow one quarter and next quarter will not grow, something of that nature. We have a complete strategy to grow year on year. Please understand the three areas we are into.
Absolutely. They're fast. No, they're fast growing, and I think we've spoken about in the past: supercomputing, private cloud, and AI systems and enterprise workstations. So, point taken. The only thing is, I was looking at the stock price, but of course, it's nothing to do with you, because you are in areas which are growing very well. The stock had run up quite a bit to about 3,100. It's come off a little bit to about 2,300. You're telling us you'll do about 130, 140 crores, 30% growth. Market cap is about 13,000 odd crores. So I think on FY26 basis, still at close to about 100 times earnings. So I think that is a more market-driven conversation more than anything else. But good luck, sir. Thank you very much for joining us. It's a pleasure having you with us here on CNBC-TV18. But I think the next space and focus, of course, that we want to talk about is telecom. And I think the pre-open rates are up on your screen. And maybe we should make a quick mention of how they're starting, especially Vodafone Idea. And we look at Bharti and some of the others, Indus, etc. as well.
1% higher, yeah. On Bharti, the rate is about 1% higher right now. Overall, the Nifty is up about 60-70 points in the pre-open. Vodafone Idea is the one that we should focus on. Now, what happened was over the weekend, post-market close on Friday, there were a slew of reports that were suggesting that the government could be looking at some sort of a relief on the AGR dues. Money Control also had, was reporting this, and the expectation is, remember, the original AGR sort of hit was almost 1.5 lakh crores, and now the reports are suggesting that there could be a relief coming in worth almost 1 lakh of crores, which is on the interest on the penalties and the interest on the penalties. Now, what could this mean for the incumbent players? Let's go across to Balaji Subramanian, Vice President at IIFL Securities. Now, Balaji, these are reports, unconfirmed, don't know. Some of them suggest there could be an announcement in the budget, but not sure. First of all, would you pencil in this in your estimates right now that the relief, if at all, could be as much as 1 lakh crore rupees?
Hi, good morning. Thanks for having me on the show. At this moment, we do have media reports, and beyond that, we don't know, what exactly are going to be the modalities. So I'm afraid, beyond what is there in the ET article that came over the weekend, we don't have any specific inputs as to whether these dues are on their way. But that said, if these due waiver were to materialize, then it will be a significant positive, especially for Vodafone Idea, considering that not only is the waiver likely to be the largest for them, but that it would also be a significant step in terms of boosting their debt-raising prospects. So two of the hurdles which came in the way of Vodafone Idea's debt-raising were, one, the significant bank guarantees that they were required to furnish. That has been waived off by the cabinet last month. And now, if there were to be a meaningful waiver of AGR dues, then their chances of a debt fund raise significantly go up. And that would also mean that they would be able to execute the 50 to 55,000 crore capex plan that they had outlined as far as their fundraising.
Balaji, right now, I mean, Vodafone is a 10 rupees stock, and because of this excitement, it's up about 10%, but the caveat is a 10 rupees stock, which is up 10%. What is your rating? Vodafone has always been like a 0-1, it's like an option. What is your current trading if you have coverage, and what's the view?
So my view is that, on this news, there can be a clear upside, because this 52,000 crores relief that the media article mentions is about 6-7 rupees per share for Vodafone Idea. I think some of it is in the price, and some of it, assuming that the benefit fructifies, there could be some, pop in the stock because of this development. But, fundamentally, some of the challenges still persist because of a weak consumption environment. We saw how Vodafone Idea saw a fair degree of churn even after the tariff hikes, and the capex program also needs to be quickly ramped up so that the 2G to 4G upgrades start happening, and there is some consumption weakness at the lower end of the pyramid. And even after all these benefits, you have pretty meaningful cash payouts, that are due from FY26, FY27 onwards, because most of the almost 2/3 of the government payouts for Vodafone Idea pertains to spectrum payments. So these are still there, and my sense is that even with after all these potential relief measures that one is talking about, the company still faces an uphill task. So I think in the long run, all these things have to fall into place for any meaningful upside from the current stock price levels. But yeah, in the short term, there can be a meaningful pop.
Okay, 5 rupees basically, right? 7,000 crores is the share capital, and 35,000 crores but potential relief. So that's about $5 straight up. Balaji, we'll leave it there. Thank you very much for joining us. Quick view, but very useful for our viewers this morning. It's extremely widely, probably one of the most widely owned stocks in the country as far as retail shareholders are concerned. But this is a big if relief and relief at this scale. Both have to happen for this, for what we're talking about. For now, of course, markets are reacting and pressing the button. 9:10 call. Sudarshan is with us, and so is Mitesh. Gentlemen, morning again. Sudarshan, what do you have?
Well, consider buying MCX. Buy MCX with a stop under 59.70.
Okay, MCX is a buy. And Mitesh, what about you?
I would go with a buy on Adani Ports.
Okay, buy on Adani Ports. We are talking about Adani Group stocks next. But gentlemen, thank you very much for joining us. This is Hormus joining in on both Adani Green and Adani Ports. There are some brokerage views coming in. Hormus, take it away.
Jefferies has come out with a note on 3 Adani Group names, but 2 of them stand out because 2 of them have seen price target cuts of up to 35% from Jefferies. One of them being Adani Green Energy, where Jefferies has maintained its buy rating, but it has cut its price target from 2,000 rupees earlier to 1,300 rupees. So that's a 35% price target cut, where they're saying that the 9-month FY25 capacity addition is lower than estimates, and hence they have cut their FY25 to 27 capacity addition estimates by 4 to 6 gigawatts. And their EBITDA estimates by 4 to 23% over the same time frame. Although the stock is trading at a premium to JSW Energy, Jefferies believes that the long-term growth story remains intact. For Adani Ports, it has also maintained its buy rating but cut its price target to 1440 from 1855 earlier. That's around about a 23-24% target cut. They're saying the volume growth again in the third quarter was lower than their expectations, and that weak growth that the industry has seen was partly offset by market share gains, where they're expecting the market share to rise up to 30% by the end of FY27 from the current levels of around 27%. And they have also reduced their FY25 to 27 volume estimates by around 3%. So price target cuts coming in for both Adani Green and Adani Ports, but Jefferies still maintains a buy rating on both of them.
Got it. All right, Hormas, thanks very much. By the way, look at Kotak Mahindra Bank and look at Wipro in the pre-open. 7% up on both of those stocks as the market salutes Kotak's fantastic numbers and Wipro's margin show, plus the capital allocation policy, which now talks about a higher payout. Very, very quickly, levels, Mitesh, on both of these stocks, 1890 on Kotak and about 300 on Wipro right now.
Well, I think, Kotak Bank, if you look at the weekly chart, last 3 occasions, the stock has peaked around 1910. We've not had a weekly closing about that. But looking at the way it's shaping up today, once this level is cleared, expect 2000 to about 2025 as the minimum target, and beyond that, we'll look at even much higher targets on the stock. So I think it's done about 2-3 years of consolidation. This could be the first trigger of suggesting that a breakout could happen. Wipro, on the other hand, last few days we saw some correction over here. I think around 300 to about 305 is an area which the stock might find it slightly difficult to stay above. But if it can do that, then I think we'll look at a 325 kind of target. It's opening in that range, so I'll see the reaction first immediately. If it's failing to sustain over there, then I think I will not look at Wipro, but rather focus on Kotak Bank.
All right, Mitesh, that's Wipro and Kotak Bank in focus. We'll just look at the market open and then we'll look at individual names, etc. as well. Kotak, of course, I mean, there are a couple of these brokerage upgrades. Motilal is one of them. But, for a while now, there is also this speculation that 811 ban will also perhaps is going to come off sooner than later, and that's going to be that's of course going to be meaningful whenever that happens. But that is of course a regulatory issue. Even apart from that, for the last 5 years, as we've been talking about, stocks been extremely ranged, next to nothing in terms of returns. What do we have? First rates coming up. So the Nifty, sensex indices, and then we'll get into individual names. About 1/3% higher on the Nifty, 23,287. The Bank Nifty is up about 0.5%, 48,770, 780. So a 1.25% on the Nifty and the Bank Nifty respectively. Sensex is up about 1/3. The mid-cap index is up about 0.5% or so, nearly 0.5% in terms of gains which are coming through. 23,257 is where the Nifty is starting. That's about a 55-point gain. IT index is up about 0.6%. And I think on the heat map, Nifty heat map, 35 odd names, maybe a little more in the green, and the rest which are starting lower at this point in time. Surabhi.
Okay, let's boil this down to stocks, and I must say that it's very narrow, the leadership and the exuberance on top. It's Wipro and Kotak Mahindra Bank, 6.5% up on both of those stocks. SBI is doing okay. SBI's gain is less than 1%. So look at the divergence. The top 2 winners of the day are up 6.5%. Everything else is up less than 1%, including SBI. Reliance also just about 0.5% higher. So it's a little skittish, you'd have to say. There's some buying on pharma and FMCG. Sun Pharma, Lever is up and about. TCS is doing okay, but the gain is about 0.3%. So it's a very, very narrow market at the top. On the flip side, Shriram Finance, we have to figure out what the issue is. It's down 6%, the stock. Now, is this some rub-off looking at maybe RBL's earnings, looking at pain, something else? But this is a very sharp knock on Shriram Finance. We'll get you more on the stock in just a bit. The exuberance is coming off some of the other BFSI names. SBI Life actually had very good numbers, but the market is in the mood to take some profit off. Remember, a lot of the life insurance stocks ran up after HDFC Life, so there's some profit taking over there. IndusInd Bank is also on the lower side. HDFC Bank, ICICI Bank, basically financials are quite weak. Other weak names include Tata Steel, Tata Motors. There is also Adani Enterprises, which is down. Let's look at Adani Ports. We're just looking at the Jefferies note, so let's see what the stock reaction is. Both Ports and Enterprises, both of those Adani Group stocks are down. Adani Ports falling more, down about 1%. Markets gain is about 40 points. That's on the Nifty. But let's see if it can hold. SBI and Reliance are providing good support. There's also Lever on the upside. There's Britannia on the upside. So the bulls are trying to fight back and retain their lead.
All right. Well, keep an eye on a few stocks. Sterling and Wilson, the stock is down another 6.5%. I think they've gone ahead and cut their guidance. So that's the reason why, in fact, the stock has continued to see selling pressure, 6.5% lower. The order inflows not as much as they expected earlier. So there was some skimming back in terms of estimates. What else is moving around? Vodafone Idea, in pre-open, there were more than 20 crore shares that were pending to buy. So that's a stock that, in fact, you should keep on your radar. Keep an eye out on that one. Kalyan Jewellers, another one that's moved up close to around 5% or thereabouts. And for the sugar space, I had a few of those names in there that are buzzing in trade. Whether it's Bajaj Hindustan, whether it's Balrampur Chini, they are all moving higher. There was that, that relief that's come in terms of export quota. So I guess that's something that's having a bit of a rub-off. Kalyan Jewellers still holding with the gain, close to around 5% as we speak.
All right, no, absolutely. And lots happening, right? I mean, things are moving around. Let's welcome in our market master of the day. Pankaj Tibrewal is founder and chief investment officer at Ikigai Asset Managers. Pankaj, welcome back. It's been a while. Thank you very much. You've been ahead. You turned cautious early, and do I dare say you're turning a little more constructive early? So explain to us the thought process, how it's changed, and where are we now?
Good morning, Prashant. I think to crystal gaze 2025 and the markets ahead, we have to see what worked in our favor last year. So clearly, one thing which was clearly in our favor was commodity prices. They have been benign for a while, and that helped corporate India on margins. And we saw record margins in most of the sectors for corporate India. Second, I think the one-time dividend which RBI gave to the government helped on the government financing. The third thing is the capital gains and the STT, which in our view this year will be 2.5 lakh crores, 1/4 of the personal income tax collection, and that probably helped on the government financing. And fourth is the bond inclusion inflow, which we saw to the tune of $17-18 billion. And that offset the kind of weakness we saw on the foreign FI flows on the equity side. And obviously, the last one was the strong domestic flows. And hence, we saw a market where broader market did well than the frontline indices. Going into 25, some of the concerns, which I think are genuine and we need to address them. One, we did a dealer check across the board, across distribution, across sectors. And one thing which is coming out clearly is that the liquidity is extremely tight. And that's also shown that after 5 years, the liquidity in the banking system has turned negative. And we believe that sooner or later, RBI should resume OMO or Forex swap transactions to normalize the liquidity into the system. But across businesses, across distribution, the common language is the liquidity is tight. And working capital cycle has got elongated across the board. The second one is that probably the government capex has slowed down materially. Though we expected that in November, December, post-monsoon, it should pick up, but we have seen only in some in some sectors, government capex picking up. But broadly speaking, I think government capex is down. And our sense is this year, compared to the budgeted number, will be down by about 10 to 12%. And hence, we should undershoot on fiscal From 4.9, we should end up at 4.7. That's our expectation. Once government comes back, I think government capex comes back, I think we should see normalcy coming back. The third thing is a lot of froth is out of the system. The index masks the damage. Though the index is down about 12 to 14%, depending on which indices you're talking about. But when we look at the entire universe of 4,600 stocks, about 75% of the universe is down by more than 25% plus. So clearly there has been a lot of froth which has been taken out of the system, and growth has slowed down, and so has been earnings. Our belief is that after the third quarter results, the FY26 estimates, which in our view is still on the higher side, should get reduced to between 10 to 12% or 11 to 13%, somewhere in that ballpark. And once that reduction happens, we believe that constructiveness should be there on the market side. However, I would like to caution that money making, the way we have seen in the last 3-4 years, the easy money is behind us. We should now work on bottom-up ideas and make sure that stock-specific movements will happen. Also, various sectors, 3-4 sectors which are there, which probably is a contra call. One, I think cement, clearly. It's back to 2003-4 in terms of contribution to profitability. The second is metals. Nobody is talking about it. But if both the economies, the largest ones, China and US, goes on fiscal expansion, I think liquidity will be abundant in the global system, and that should bode well for commodities. And third is specialty chemicals. After 7 quarters of decline in specialty chemical on an aggregate basis, this will be the first quarter where we see marginal profit increase on an aggregate basis. That's our assumption. And probably for the next 4 quarters, specialty chemical is one segment which should show strong earnings growth, partly because of a lower base and partly because of destocking in agri coming to an end. So that's where we are. But I think the easy money is behind us. Markets should consolidate for next 12 to 18 months, and bottom-up ideas will make you money.
Well, just want to say that the consolidation is well and truly on even today, and this is a morning that we need to take note of. India is a rank underperformer across Asia. Asian markets are cheering. They're up anywhere between 0.5% to 2.5%. But look at us, the Nifty is struggling to hold on to this little shade of green. And the Bank Nifty gain that you're seeing, about 0.5%, that's largely driven by Kotak Mahindra Bank and State Bank of India. SBI is keeping its head above water because otherwise there's a lot of profit taking underway in BFSI. I just want to highlight that because that's the key trend of this Monday morning, profit taking in BFSI. Shriram Finance is still down about 5%. SBI Life is now down 2.5%. IndusInd Bank, HDFC Life, look at HDFC Bank, look at ICICI Bank. Basically across the board profit taking on BFSI, barring 1 or 2 names. Pankaj, hi, morning. So I want to actually, dive a little deeper in this pocket because I think this is the next piece of the puzzle which the market is trying to wrap its head around. Now, you've got Kotak Mahindra Bank on one side. Wherever, governance and management qualities of high order, look at what they've done. They've expanded margins. Their slippages have fallen. And the market's saluting that. On the other hand, you have an RBL bank and you have other lenders where the asset quality pain is beginning to show up. How will you navigate BFSI? And on insurance as well, the market doesn't seem to be very convinced. We had a couple of good days of rally after the HDFC Life numbers, but look at this, it's already profit taking this morning. So clearly, there is nervousness in pockets like insurance. How will you pick and choose in BFSI?
Good morning, Sophie. So if you look at BFSI, 2 things are very important to note. One, I think last cycle in BFSI was all about corporate loans. We believe this cycle will be all about retail. And we will look and doing some number crunching. In FY20, the total EMI burden of India on the consumer side, which includes housing loans, consumer loans, credit card loans, vehicle loans, microfinance loans, was to the tune of 19.5 lakh crores. That's the total EMI burden. In the 4-year period, that has moved to about 40 lakh crores, almost doubled. So households have leveraged, and as a percentage of GDP, our belief is the leverage is now at 43%, which used to be 32-33% few years back. And the incomes have not gone to the same extent. And I think that's creating pressure on the retail asset quality side. And whichever companies have grown in this space at a very fast pace, especially on the unsecured side, will have to face the brunt. So we need to be extremely careful on the BFSI side that what is the loan book? Is it more unsecured? Then we need to be a little careful on that. And I think that's something which is a reality. That EMI burden has increased almost 2x in the last 5 years, compared not to the income levels moving to the same pace. And the second is that most of the assumptions, if you look on the BFSI space for banking and BFC, the loan growth is anywhere between 14 to 15%, assumptions by the street. The credit growth has come down to 11%. That means that some more earnings downgrade will happen in this sector before the sector sees the bottoming out. On valuations, it looks to be decent, but on earnings assumptions, I think it's still on the higher side. If the credit growth remains at 11-12%, post the third and the fourth quarter numbers, we may, on an aggregate basis, reduce the earnings estimate for next year for BFSI, banking and NBFC especially. On the other hand, if you look at the insurance space, especially the life insurance guys, they seem to be very well poised. If we assume that the yield curve will steepen going forward, they are the best proxies in this environment. So from our perspective, we need to be a little choosy on the BFSI space. Few names on NBFC and banks, which are better on the secured loan book. Few names on the life and general, I think should make a good portfolio on the BFSI side, at least for the next 12 to 18 months before we take a relook on our call.
All right, got that. Pankaj, a little shorter chat today because of all the earnings and lots of the management interviews that are lined up. So we'll keep it brief. But thank you very much. This is helpful. And we look forward to a longer, more deeper chat next time we catch up. Thank you very much. Have a great day. Well, with that, let's shift back to the big global headline. Donald Trump is all set to be sworn in as the 47th president of the United States tonight. So what could his tenure mean for tariffs? To try and answer this very difficult question, we've got Prashant, who's moved to the wall with some interesting anecdotes and data. Prashant, over to you.
Well, thanks very much for that. What we're going to do is just look at 4 scenarios because tariffs are coming. It's just a matter of whether he's going to go big on day one or whether he's going to do it in a gradual way. So there are 4 scenarios, but this is essentially what he said so far during his campaigning, etc. About tariffs. On China, tariffs could be between 10 and 60%. Canada and Mexico recently he said 25% tariffs, and other countries could be between 10 and 20%. So this is essentially the tariff threat which he's made during campaigning and, of course, after he won the election as well. Now, what are the 4 scenarios that we are looking at, right? The first is a repeat of 2017. 2016, he won the election. 2017, 20th January, he took over. What happened back then? Markets were disappointed relative to what the threat was. So US negotiated but did not act very aggressively as far as tariffs are concerned. If you look at effective tariff rates in the US, import tariff, they rose by some 18% during the course of Trump 1.0 during his first term. So it was a gradual move, and the effective tariff increase was about 18% or so. What happened to currencies? Because essentially that's one significant channel through which it affects us. 18 to 19, the renminbi depreciated by 14% versus the dollar, and the DXY was up 11% or so. But initially, when he took over, the dollar actually sold off in response. I mean, that's what we've been talking about, whether it's possible that, you see buying the rumor, sell the news kind of activity, at least in the very near term. And then, of course, gradually things move ahead. The second scenario is gradual implementation of tariffs. This is perhaps, according to many, this has got a higher probability in that sense. So it gives US more leverage in negotiations than sort of putting the full size of tariffs on day one. It gives US optionality to increase or decrease the rate of tariffs. I mean, you put something out and then say, well, I'm willing to negotiate with you. It gives you more leverage. That's the logic. Now, what will markets do in a scenario like this? We have some idea. There is, because there was a news story recently on the 13th of January that Trump team was studying monthly tariff increases of between 2 and 5%. The dollar sold off very quickly on this. So if this were what actually happens, which is monthly increases of between, whatever, small increases, but monthly increases, so a gradual tariff increase, it would disappoint the market. And at least in the near term, the reaction function would be, as we saw recently after the news story, the dollar sells off. Number 3 is targeted industry tariffs. And this is perhaps the more complicated of the lot. So you're not looking at countrywide tariffs, but you're looking at specific industries, products, etc. So it could be tariffs on Canadian auto, sort of companies, lumber, etc. Chinese tariff on Chinese machinery, electronics, etc. And it would be complicated to kind of analyze and scrutinize the impact from these specific tariffs in that sense. Again, we've got a sense of what this would mean for markets. We had a Washington Post story which kind of exactly mentioned this. It said that, tariffs would mainly target critical imports and they would not be widespread. They would not be overall tariffs on everything. What happened? The dollar sold off very quickly and aggressively as well. So again, this is a scenario. If it plays out, it's unlikely. But if this plays out, you see dollar downside. Number 4 is the last of the 4 scenarios. And this is perhaps the most disruptive. Everything on day one. Go big on day one, as many have been pointing out. So this would see significant adverse market impact across asset classes. And when we say day one, we mean today, right? He takes over today. And perhaps if this were to pan out, we'll see stuff happening in the next 48 hours or so. It would reduce the negotiating ability of the US because, you're saying, well, I'm going to do this and it's going to be retaliation, etc. The dollar in this scenario could skyrocket even from here because, again, markets are not assigning too much probability, although he said he'll do it, but markets are not believing that he will, at least not all of the tariffs on day one. And of course, there would be significant inflation concerns, etc. So higher yields and higher dollar on the back of the of scenario 4, which is big tariffs on day one. So, just a snapshot view. We'll have to wait over the next 48 hours, not too long, right? The next 2 or 3 days, and we'll know which way the scale of the tariffs and the pace of the tariffs is it going to take. Back to you.
All right. Thanks a lot, Prashant, for that. We'll have to see what Mr. Trump has in mind and how he goes about the execution plan as well. Let's turn our attention to the auto space as electric vehicles take center stage at the Bharat Mobility Global Expo 2025. Our colleague Parikshit Luthra caught up with the MD at Tata Motors, Mr. Sailesh Chandra, and he also is the president of SIAM. He began by asking him about the key trends in the EV space and also budget expectations for the entire auto sector here in India. Let's hear out what he had to tell us.
I believe that with the excitement that you have seen around electric mobility, just go back 4 years, 2020 maybe, when you would have come for the Auto Expo, how many electric vehicles were you seeing? And today, literally every manufacturer is coming with one electric vehicle or the other, whether it is two-wheeler segment or a three-wheeler segment or cars or commercial vehicle. You are seeing the theme is full electric. If there is so much of combined interest that you are seeing from all, not only the OEMs, but also all the ecosystem players, you are seeing a lot of ecosystem display also. This is bound to grow multifold, and last 4-5 years, if you see, the highest growth, the CAGR has been upwards of 150%. So this growth is going to continue because of the combined interest of all the ecosystem players as well as the OEM, and continued support of the government in terms of lower GST rate, multiple schemes, whether you talk about the PM E-Drive scheme or whether you talk about the PLI schemes, not only for auto but also for battery cell manufacturing. So I think all the enablements required to grow at that pace is very much there, which is for the first time I'm seeing, because while government was doing its bit, but the response of ecosystem players had to be what it is today.
Right. Would you say that 2025, seeing what's happening at the Auto Expo or the Bharat Mobility Expo, 2025 will be the inflection point for EVs? Some years ago, we were seeing EVs in a 250-kilometer range. Now, at the Bharat Mobility Expo, literally no car maker is offering anything less than 450 kilometers of range. Do you feel that 2025 will be the year for an inflection point in terms of pricing, the right range and high quality products, and this is the message coming from the Expo?
Yeah, I think, the whole environment has kind of come to a level where a lot of things are converging together. One, policy support is at its peak, I would say, with all what I talked about. The interest of OEMs are also pretty much there to see. You have the regulations also favoring electric vehicle, promoting electric vehicles and moving away faster from the ICE world. And I think fourth biggest enablement, which has made all this possible, what you said, 500 kilometer plus cars, more investment into tech that goes inside the car, is because of significant reduction in the prices of the cells. Nearly 60% reduction in the last 4 years has happened, which has unleashed the ability of OEMs to give higher range, and along with higher range give more features, because whatever money or cost you could give inside the car was all directed towards the battery pack. So I think all these trends are converging together, and therefore I clearly see this as an inflection point. There are definitely certain residual barriers which are still left. Charging infra has to grow much faster and has to be at a level which can support the growth that we are trying to envisage. But that is also an effort which is clearly coming in the PME drive, with the support for 2,000 crore of support that is being given to the public charging infra.
When we speak about electric vehicles, we're now at the Bharat Expo, we're seeing strong SUVs in the range of anywhere between 18 lakhs to 25 lakh rupees. Do you feel that if this Bharat Mobility Expo was an inflection point, perhaps by the next Expo we're going to see prices come down significantly?
You are talking about the electric vehicles?
Electric vehicles.
I would say that now the prices of electric vehicles have pretty much stabilized. There was a point where electric vehicles were 2 times the price of an equivalent ICE vehicle. Today you are seeing most of the vehicles, now at least are coming closer to the price of an automatic ICE car. So, and battery prices have also fallen down to a level below which it can be some incremental, reduction that you can see, but it has come to a level where it is more stable.
What do you think is the kind of support that we now need? The budget is around the corner. There is one conversation you always have on levies and taxation, but at a broader level, what is the support that the industry needs right now?
I would not limit it to a narrow ask of what the budget should be, but this is all these technologies would mean that you have to create all those skills and capabilities within the country. And when you say skills and capability, it is infra as well as the people skills, right? And this is something which will be a joint effort of government, academia as well as industry, which should collaborate and work rigorously towards building these skills, because these are going to throw new job opportunities, more different kind of employment, and we have to get the workforce ready to do that. And SAM has done a very deep research on this and also given the recommendations to the government. And therefore, with this kind of a big picture in mind, everything should align to that. All policies, budgets and all should align to that for a longer term vision that we have in this space.
But do you think taxation needs a relook?
We have always said through SIAM that we are looking for a reduced duty rates for all categories of vehicle, because possibly these taxations are very high when you compare with any other country. That ask has been there, that ask continues.
All right, so those are some of the thoughts that are coming in from the Auto Expo in Delhi. By the way, the colors changed to red on the screen. It's not looking very, very good, considering that global cues have been supportive. Equities around the world are doing well. The dollar's pulled back. None of that is helping the bulls cause here in India. Now we're down 26 points in the Nifty. The mid-cap index has also slipped. So it's not like it's just a large cap, selling kind of a morning and there's action in the mid-caps. No, all-round weakness is what we've got. Just a couple of names. Like I've been saying, it's largely BFSI names, which is where the profit taking is. And the latest blow is in the form of, the life insurers. Both HDFC Life and SBI Life, they're losing further ground. Let's see what else. Actually, some of the tech names have moved down. That's what's caused this latest one. Look at TCS, look at Infosys. None of them are contributing to the upside. And that explains the weakness. The Lone Rangers on top, however, Kotak Mahindra Bank, it's really being rewarded for its superlative performance in the third quarter. Almost 10% up now on Kotak Mahindra Banks. That's a big, big winner out there. And even Wipro, 7% higher on Wipro. But let's stick with the auto space. Our main focus is on completing all varieties of products and maturing the technology. This is the word coming in from Shenu Agarwal, Managing Director of Ashok Leyland. He was speaking on the sidelines of the Bharat Mobility Expo 2025, and he also spoke about the company's FY26 targets. Take a look.
The sentiment is improving now, right? Since mid-November, we are seeing that government capex is on the push now, right? So a lot of that is going into actual projects. A lot of new projects have been awarded. And we are really hoping that although Q2 and Q3 was a little bit sluggish, but we are hoping that Q4 should be at least flattish, if not some growth. So if that happens, we really think that will set up a very good base for next year. See, the market is still going to be very small, right? Because there are infrastructure, ecosystem level issues that are yet to be sorted out. You know, whether it is charging or swapping or anything else, you know, that still needs to be sorted out. So we are not looking at market share. It's not a market share game as yet. You know, what we are focusing on is completing the whole variety of products. We are looking at maturing the technology. So when the market is ready, you know, Ashok Leyland should be at the forefront. See, our capex normally is between 500 to 800 crores, and we would, I think, stay within that number. But more and more capex is now shifting towards cleaner fuels and electric vehicles.
Okay, well, that's a fair bit of auto coming your way. By the way, I think, did we mention Kalyan? Kalyan is up 8%. If you can just quickly pull that name up, and then we'll take slip into a quick break. I mean, basically, it's fallen one way, right? 40% price damage in 10 days, ending last Friday. And today it's seeing a decent, strong bounce back at about 540. It's the second largest volume traded name right now on the market. So high interest name. We'll take a break here. We are back with the management of Canfin Homes on the other side. They reported third quarter numbers.
Well, let's talk about Canfin Homes now. Quarter 3 was a weak one, both on the dispersals as well as AUM growth was tepid. However, the outlook could remain fairly positive from here on if what we saw in terms of one-offs in the past quarter are resolved. To understand more, we are joined by Mr. Suresh Iyer, the Managing Director and CEO at Canfin Homes. Hi, Mr. Iyer, good morning and thanks a lot for joining in. Well, quarter 3 was impacted by a couple of factors. So, in both your geographies, I want to ask you, Bengaluru as well as Hyderabad. Has the situation in Bengaluru been resolved and the situation improved in Hyderabad?
Actually in Bangalore, we almost got hit by about 400 crores. We could have done better had the e-Khata issue not been there. Things have started to slightly look up because till in the last about 20 days or something, about 80,000 e-Khatas have been released. But still, it's just a trickle considering the amount of applications that have already come in. So what we require is quick resolution of this program, and then we will definitely be able to look up. But things have started improving a little bit. Telangana is still a little slow. We would expect some more change and some more positivity and in the sentiment in the market in Hyderabad. But if Karnataka also grows, we should have a good quarter in Q4 because that itself is contributing almost 30% of our incremental business and of our AUM as well.
Okay, all right. Mr. Iyer, let's get to a couple of numbers then.
Sure.
Year to date, your dispersals are roughly around 6,100 crores, very, very roughly. Now, earlier, I think you were talking about a number of around 10,000 crores.
Correct.
So what is the realistic number you can end this year with? Can you do around 2,500, 2,700 crores in quarter 4? Which means for the year, you'll be in that vicinity of around 8,500, 9,000 crores. Tell us, what is your revised dispersal targets? Please go ahead, sir.
Looking to the present situation, if we should be able to do a Q4 of last year numbers, which is around 2,400. But if Karnataka improves and we are seeing some improvement, then we could better that also. And yes, we are targeting around 2,700. If Karnataka improves, we should be somewhere in that range. So that's what we are looking at. But otherwise, also even without with the present situation that Karnataka is in, we should be touching or a little tag better than the Q4 of last year.
So then for the year, you'll be in the vicinity of around 8,500 to around 9,000 crores. 8,500 could be the lower end and towards 9,000 could be the upper end. Is that correct?
That is correct. Closer to 9,000 will be the higher side. That is correct.
All right. And is it too soon to ask you about how FY26 is like to shape up? What are the targets you have in mind?
See, next year we definitely would continue to have our target of 12,000 crore because, in Q2 we had started seeing good numbers. Our north is doing well. Rajasthan, Gujarat is already doing well. It continues to do well. Tamil Nadu continues to do well. We had some slowdown in Andhra in the first quarter, but in Q2 after the change of government, that has also started improving. So I think barring Karnataka and Telangana, I think all other markets are doing well. So I would continue to have the same target for next year of 12,000 crores.
12,000 crores. And what would that mean in terms of AUM growth?
That would be around 15% AUM growth next year.
And this year, what will you end with?
This year, if around 2,300, we should be around closer to around roughly about 10% growth in AUM.
10% AUM growth. On the margin aspect, I wanted to ask you, NIMs, I think they came on slightly under pressure, but spreads improved.
Correct.
What is the cost of funds as of now in comparison to what it was at? Are you seeing some easing on that front?
See, Q3 we had some benefit in cost of funds for two things. One, we had a couple of reduction in our bank term loans. We were able to move some of our term loans from MCLR linked to repo linked. All our loans now on the bank borrowing side are linked to repo. So that's a positive. Second thing is we also raised about 1,600 crores from our NHB. So that was also came at a lower than bank cost. So both these things have benefited us or helped us in the Q3 results, Q3 cost of borrowing. Q4 normally the rate of interest does go up a little bit. There is a little bit of liquidity pressure, so it could be a little high. But the impact overall on the year would be much less because it will be spread out over the quarter. So we may not have a very large impact in terms of absolute numbers. So we are not very worried about the NIMs. And the spreads we continue to hold our target of 2.5% plus in terms of interest spread, and 3.5% plus in terms of NIM.
Okay, all right. And final question, what's the outlook on developer loans, sir?
No, we are not doing developer loans, but we do have APF tie-ups. We started that in June. And so far, we've had some good traction. Now, slowly, we are getting better results. By the end of the year, we should be around 60 to 75, APF projects we should have tied up with for loans. But we are not doing developer loans.
All right, Mr. Iyer, we appreciate you joining in. So that number in terms of dispersals has got revised to around 8.5 to around 9,000 crores for this year. Next year, you're still gunning for around 12,000 crores. And in terms of AUM growth, 10% this year and close to around 15% for the next year itself. The stock actually is still holding in the green. It appears the sheet has factored in most of the negatives at this price.
Well, NBFCs are going to be in HFCs, and within the NBFC space, perhaps will be an interesting pocket that we'll have to watch out for if interest rates start to come off. I mean, it's a broad macro kind of a theme, and HFCs are the safer, actually the safest of the non-banking companies, just in terms of lending and how much, level of NPAs, etc. So it's just about how efficiently they run. Canfin Homes in focus there. I think we have the management of ICICI Lombard now joining us. By the way, the news flash at the bottom of the screen was about telecom, and we'll have Ashmit join us in just a bit. Indus Tower is back up about 4.5% as we speak right now, and of course others like Idea, etc. Has been up 10%. It's not really, the circuit's not open. Well, I'll come back to all of that. Lombard in focus to discuss the third quarter performance. Mr. Gopal Balachandran is Chief Financial Officer of the company, and he's with us now to take some questions. Sir, good morning. Great to have you with us here as always. Prashant this side. So your FY24 net earned premium stood at about 17,000 crores. 9 months 25 number in terms of net earned premium is 14,575 crores. Do you think you can add about 5,000 crores in Q4 to cross 20,000 crores for the full year 25?
So good morning, Prashant, to you and all your viewers. So I think if you look at from an ICICI Lombard standpoint, I think this I kind of talked about even in the some of your earlier calls. I think what we're looking for is, I think on the growth front in terms of premiums, is to continue to see if we can have an alpha over the industry growth. I think we have broadly talked about a range of 100 to 200 basis points. I think that is where we stand. I think specific in the context of net earned premium, I think that has a lot of moving parts because different businesses have different risk retention thought processes. So, but I think where we are kind of placed for is to try and continue to see an alpha over the industry growth of 100 to 200 basis points. And that's what you would have seen even on a 9-month basis. The industry grew on premiums at roughly at about 7.8%. Our growth was roughly at about 10.3%. So that's where we are. Different segments, I think each of them presents an opportunity to continue to leverage on that.
Mr. Balachandran, but I know you don't want to put specific numbers, but in the ballpark, this seems doable. 20,000 crores for the full year, in the ballpark.
Yeah, so I think see what we have largely spoken to the market is in the context of the industry, because as I said, there will be a lot of moving parts in terms of how things play out. So in that context is where I think I would kind of say that what we would largely monitor as a metric is to look at alpha over industry growth. And more importantly, I think what we also keep looking for is how we can continue to deliver sustained return to stakeholders.
Okay. Mr. Balachandran, so the operational performance is very good. The underwriting losses, they've reduced considerably. I think the drop is about 46%. Operating profits have been surging. Just walk us through what led to this. One, I think in the fire segment, you've taken a premium hike. I'm not sure by how much have average premiums gone up in health, but just run us through the trends and what the expectation is for the coming couple of months as well.
Subhi, good morning to you. And let me again just put this in context. I think again, if you look at this year's 9-month numbers has got an element of, I would say, a regulatory change. For example, effective 1st of October, the regulator has introduced a new way of recognizing premiums for long-term policies, as in to say that in the past, if an insurance company would have collected a premium on a long-term policy, the entire premium would have got recognized upfront. And similarly, any cost of acquisition that you would have incurred would also have kind of got recognized upfront. Effective 1st October, both of them changes, as in to say that the premiums will get recognized on a 1/n prescription. That is to say that it will be amortized over the contract period. And similar will be the case in the context of cost. So hence, when you look at now specific to your point on the underwriting result, given the fact that you had the element of an amortization of acquisition cost over the policy cycle, there is obviously an improvement in underwriting that one has seen. And that's what we also put out specifically as a separate slide, also post our earnings call, to reflect what has been this impact of change consequent to the commissions getting deferred, its impact on the operating profit numbers. So that number is roughly on a profit before tax basis, roughly about 60 crores. But more than the absolute numbers will be, I think I would kind of continue to urge all of your viewers and the market at large to keep looking at more the outcome on the combined ratio, because that's largely a reflection of the insurance operations. And there pretty much we are on track in terms of the glide path that we have spoken about.
Which means that your combined ratio should drop to about 101.5%, right? By when?
So Subhi, again, I'll put that in context. I think because even in my earlier calls, I think I had kind of indicated that from an ICICI Lombard standpoint, we would obviously want to continue to see our combined ratios better than the overall market. But if you look at the half-year numbers for the industry, which is available at trailing quarter, first half of last year, the combined ratio for the industry was 111. This year's combined ratio is roughly about 113. Now, if this trend line continues, then obviously we can't suddenly see a significant outperformance vis-a-vis the market, while we will continue to have a delta. So hence, I think we are on track, whether it is in terms of growth, whether it is in terms of managing claims, or even in terms of operating outcome. But obviously, I think the trajectory is looking very, very positive. If the industry continues to remain sensible in terms of outcomes, there is no reason why we should not get to that combined of 101.5 or even better than that.
But you've not specified the time, sir. Is it this fiscal, or are you pushing that target to FY26?
So which is why I think we'll have to wait for the results to kind of play out. That's the reason why I said this has to be looked at in context. And then obviously, as I said, if the market responds favorably, there is no reason why we should not get to that combined of 101.5 earlier.
Okay, so just to go back, I'll take your points. One is the regulatory change and the manner in which, the premiums are being recognized. That's been one factor. Overall, you're saying combined ratio will keep moving down. Just that word on, in general, how you see premiums rising. Fire, there's been an increase. On health, what do you see ahead? And therefore, I come back to the point that, will operating profits keep improving going forward as well? And to what extent will that be a function of the hike in premiums?
Yeah, so
especially on health.
So that's a great question again. But again, markets are where they are, right? They obviously will remain competitive. And therefore, to that extent, is how we will have to see things play out. But having said that, I think your point is absolutely right. On the insurances that you have been extending to corporates, which is the commercial lines, in the last 9 months, we did see that segment exhibiting price pressures. And that's the reason, unlike the preceding 10 years where we would have normally, ICICI Lombard would have gained market share, this year our market share has remained muted in commercial lines as a category. But the good news is exactly what you referred to. I think effective January 1, the pricing discipline seems to be looking up quite positively. But the real impact of the price change on the commercial lines is something that we will see when bulk of the corporate renewals happen on April 1. But overall direction or trajectory is looking positive in the context of commercial lines. On health, to your specific point, two segments, corporate health and retail health. On corporate health, we continue to see pricing pressure, and therefore, to that extent, from an ICICI Lombard standpoint, our philosophy of carefully selecting risks stays intact, and hence, to that extent, we have actually kind of let go some of the portfolios in the context of corporate health. On retail, I think the investments that we have spoken about in distribution and the launch of new products, for example, in Q2, the new health solution Elevate that's been received very well. Now, there again, if you look at the loss ratio range that the retail health book is exhibiting is around the range that we have spoken about at about 70%. And a lot of work for us, for ICICI Lombard, is happening in the context of claims management. But equally, in case if the portfolio warrants any kind of a price change, we have not shied away from taking one.
All right. We'll leave it there, Mr. Balachandran. Thank you very much for joining us. Pleasure. Thank you. Good luck. Well, the government is considering telecom industry's demand for an AGR waiver. CNBC-TV18 has independently confirmed the news report. Ashmit is here with what he's picking up on this important news story. Ashmit, good morning.
So clearly, this is an issue that has been agitating the telecom sector. They've raised this issue on multiple occasions, and we understand that the government is considering some form of waiver mechanism to allow that much-needed relief to the industry. Mind you, the figures in question are quite large. Vodafone Idea cumulatively is looking at something north of 80,000 crore rupees. Bharti Airtel looking at something north of 42,000 crore rupees. So clearly, there's a significant burden on the industry. The government is considering whether there is room for removal of the penalty component entirely and perhaps partially the interest component as well. That will significantly take away from this burden that is confronting the telecom sector. However, a couple of aspects to bear in mind. This is an issue that the telecom sector has been agitating aggressively for several years now before the DOT, number one. Number two, there have been multiple Supreme Court rulings which have confirmed this AGR demand. 2019 is when the AGR case was lost by the telecom companies. Subsequently, in 2021, their review application was dismissed, where the Supreme Court had again set aside their concerns on recomputation and had reconfirmed that AGR demand. And subsequently, more recently, in September of 2024, their curative petition had also been rejected. So there is some legal work to do, if at all there is any progress to be made on this, number one. Number two, as far as the whole issue of relinquishing of public funds is concerned, that is another issue that the government will have to consider while considering this demand by the telecom companies. And third, of course, the entire process, given the fact that it will require approvals at multiple levels, there is no finality in terms of when this can be proceeded with. But clearly, there is some willingness within the government to consider how to address this issue that has been plaguing the industry for very many years now. Back to you.
Okay. All right, Ashmit, thanks a lot for that. I guess this is going to be a legal cum political issue that will drag on. I've butted in only because we have an important management joining us. Indian Hotels posted an outstanding set of numbers in their third quarter, 29% growth in revenues and nearly 33% growth in profit. To take us through what's going so right and how the future looks, we have with us Puneet Chhatwal, Managing Director and CEO of the company. Mr. Chhatwal, good morning. Thank you very much indeed for joining us. It's not always good for a journalist to start with such bombastic, positive adjectives, but this numbers call for it. What's going right? Is it something with the company or is it something with the industry and the economy?
Good morning, Lata. It's a bit of everything going right for the sector. I can only repeat what I've been saying. Number one, the demand is stronger than supply. Number two, there is growth. Because of the growth in the GDP, the demand remains strong. And as the disposable income rises, as the need of premiumization rises, the brands that we have, the majority of them operating within their segments in premium positions, they keep driving good results, good top line, good conversion, good flow through. And more important for us is our not like for like growth on a capital light model. So we are benefiting through asset management initiatives on own portfolio, which drive positive operating leverage and margin expansion through not like for like in new businesses.
I agree. All those are visible in your investor presentation. But you guided us for double-digit growth. Now that's a given. The point is, can you give us a range? I mean, will it be as good as this 29% that you've just posted?
But 29% includes the consolidation of the flight kitchen business, right? 16% is on the hotel segment. So we expect the flight kitchen business to grow north of 15%, whether it's 18 or 20 or 22. That only time will tell, but definitely north of 15. And if the hotel segment continues to grow, whether by 12 or 14 or 15 or 16% on an ever increasing higher base, it's something to be very pleased about. Especially Q3 is the strongest quarter. We have the highest revenue, not since today, but since several decades in Q3. If that grows at north of 15%, and we have had 16 to be precise, I think that drives a lot of profitability, and we don't expect any change to happen, any significant change, unless there is some global event outside of our control. So I think we are very well positioned in especially balancing our portfolio on capital light and capital heavy model.
Yes, you spoke to us in detail about that when we last met. The new event, of course, is Kumbh, and that has given a new high to spiritual tourism. Do you benefit from this? And is this going to be a big undiscovered vertical in the quarters to come?
I think very important is the ever-growing demand for spiritual tourism. I think whether we have Kumbh or we have Ayodhya or we have holy city of Benares or Tirupati, the number of visitors in these places is exceeding anybody's expectations. So all in all, anything which is, when you have Mahakumbh, anything which is within 100 square kilometer area is expected to benefit. And we are very pleased with our development on the spiritual tourism sector. And I always say we have only 50 plus locations. Actually, we should go to 100 plus locations and have temple circuits around entire south of India, for example, with our Ginger brand, because that is really needed in these circuits. So we're working on it with different state governments, and I do believe that spiritual demand on spiritual sector is also crisis resistant. There is no impact of any crisis on this kind of tourism unless the temples were shut the way they were during COVID.
Yeah. No, actually, what you say about South is very true. I mean, I can think of so many temples, say Tanjavur, Brihadishwara temple, Raghavendra temple, Guruvayur. There are, where people will throng, even if it is a problem, but if you give them luxury, then, that'll be lapped up. Actually,
affordable luxury in spiritual destinations.
Fair enough. Actually, let me go beyond affordable luxury. Even now, when we go to your Taj Mahal Palace or any of your really expensive properties, the crowd, the occupancy really hits you. It looks like 100% occupancy over there. Even in the best of the Goa hotels, Taj hotels. Do you think that Taj has become somewhat affordable to the Indian middle class or the upper middle class? You have to now start thinking in terms of a super Taj, a super luxury.
Well, we should always keep thinking. We should not stop thinking. But I've always maintained that Taj is not just a brand. Taj is not just a hotel. Taj is an emotion. And the emotional connect that Taj has with with India is phenomenal, and its growing emotional connect outside of India is also very strong. So the exemplary hospitality offered by Taj, again, for generations now, is also growing very strongly across the globe. And that's why maybe Taj was recognized as world's strongest hotel brand for now so many years, in the last 4-5 years, and India's strongest brand across all sectors. So I think to do something more special on Taj, we have the Taj Palaces. These are not normal hotels. These are living legacies, as we call them. And we have also Taj Safaris, which is Taj Plus, also in terms of their ability to charge. They're able to charge 3 times more than a normal Taj property.
Okay,
So,
well, then you have already thought about it.
We'll keep thinking about super luxury brand.
I'm sorry I'm rushing you because it's earnings season and there's another management lined up. So I want to ask you, what is your expectation from the budget? Is there some tourism thrust you're expecting or asking?
We have maintained infrastructure status for the sector at the central level, industry status in as many states as possible. The positioning of the sector will drive the contribution to the GDP growth as well as to the creation of jobs directly in the sector. And as the most important multiplicator of jobs, it will create a lot of jobs in other sectors. And I do believe that now in the last few years, tourism does get mentioned strongly in the budget speech, and hopefully we get a bit more than the mention on this budget.
Okay. Well, just leave me with a number, expected signings and openings in Q4 and at least a ballpark target for FY26.
Well, we'll keep opening hotels at the pace that we are, plus add another 5-6, which means 30 plus hotels in the next financial year. We'll finish this year definitely on 24 or 25 hotels open, with 122 hotels in pipeline. We expect to open at least 100 hotels over the next 3 years across all our 5 hotel brands.
Okay. So that will take you well over 300, I guess 350. And you're expecting to do, double all that by 2030. I read your Accelerate report. I mean, that's massive plans. Chatwal, we'll have a relaxed conversation on another day, but many congratulations for an excellent set of numbers. Thank you for joining us.
Thank you for having me. Thank you so much.
All right, we have to take a quick break. We'll have Manisha Gupta joining us to speak about commodities in a minute. Right, we shift from results to commodities. Manisha's here. Manisha, what's the big commodity today?
Well, it's big event really, Lata. And it seems like the year is starting today because there's so much that's happening in the markets today itself. Well, starting with the Trump inauguration. And ahead of that, we are looking at slightly subdued markets. The volumes are on the weaker side, and so is the price reaction as well. And the second thing is that you have the US markets shut today on account of Martin Luther King Jr. holiday. So that tells you that this is an added reason that there's not going to be too much volumes. So that is the reason we are looking at very, very, minor price moves in the market there. Well, apart from that, we also saw China come out with its data. China has seen or kept 1-year PLR and 5-year prime lending rates unchanged. Remember, the Chinese yuan is trading at a 16-week close, and we have seen that one continue to decline. It's actually down by 3% since Trump was elected in the month of November. So markets will watch out for on what Trump does in sense of tariffs, immigrations, taxes and deregulations as well. There's a lot of conversation around that, and the markets do believe that much of this could be inflationary as well. But we haven't seen that kind of a confidence come in for gold either today. So today seems to be a difficult day where the markets are dealing with data, events and of course a holiday in the US markets there. But I do want to start with the crude oil prices because we've seen 4 weeks of constant gains into this one. Last week was a percentage point of a gain, but even with that, we are trading at around 5-month highs for the crude oil prices. Well, for this one, the global diesel prices, refining margins also have continued to run up. And the reason for that is because the US has sanctioned 100 tankers and 2 major oil companies in Russia. That really seems to be keeping the prices where they are. In the metals as a sector, we're looking at some profit taking coming in for copper. We did see prices run up quite strongly. So when you look at this year, the New York copper prices are up by 8% and LME copper is up by 5%. Today, we're trading a percentage point on the lower side, but this is ahead of the what Trump could do on the first day of his office itself. I also want to take you through aluminum because there's more gains that we've seen into this one. Last year, aluminum prices gained up by nearly 6.5%. This year, we've seen 4% of gains in the previous week itself, and aluminum is up 9% in this year. There are reports that European Union is set to sanction imports of primary alumina from Russia. There, in any case, have been lower supplies from key producers, and that is keeping the prices higher. China did produce a record 44 million tons of aluminum in the last year. 45 million is their cap, and an expectation that you could be looking at lower production in this year also seems to be keeping the prices supported. But as I said, the volumes are lower, the price movement not so much, and today is a US holiday as well. So most of the action really would be seen in the markets tomorrow.
Point taken, Manisha. A lot of action can be expected tomorrow depending on what the president-designate says in the swearing-in. A raft of announcements cannot be ruled out since they've been preparing for so long. Break on that note, and after that, we continue with our earnings analysis. The management of Bank of Maharashtra will join us to discuss their third quarter earnings. Welcome back. Bank of Maharashtra has posted excellent results yet again. Profit is up 36%, even as gross NPAs have actually fallen. For most banks, it's actually inched up. It's fallen to 1.8% from 1.84%. The bank has current and savings deposits, you know, what we call low-cost deposits. That forms 50% of their total deposits. And I think that is better than many of the private sector banks, ICICIs and the HDFCs don't manage that much. Cost to income, that is the amount of money the bank spends to get 100 rupees. That's just 38 rupees for Bank of Maharashtra. For almost everyone else, it is above 40. So again, lowest in the industry. To take us through their numbers and give us some guidance on the future quarters, I have with Mr. Nidhu Saxena, Managing Director and CEO of Bank of Maharashtra, joining us in the studio. Mr. Saxena, first of all, thank you very much for joining us in our studio, and many congratulations for the results.
Thank you, and thank you for inviting me.
Okay, so let me get through the first number. You know, your cost of funds has actually risen, both cost of funds and cost of deposits, and yet your margins are very good. How do you manage that?
So, Lata, if you look at, yes, you rightly said, my cost of funds have gone up to 4.75. But my NIM, year-on-year basis, I have improved 3 bips. Yeah. It has gone up to 3.98. And if you see this quarter and the previous quarter, we were 3.98. Previous 2 quarters to that were 3.97. So we've been maintaining, and there are certain contributory factors to this. One among is we have actually, in the last 12 months, we have increased our MCLR by 30 bips. So my yield on advances has gone up from 9.01 to 9.27. So that is one. We have also very consciously not taken the course of raising bulk deposits at high costs. Okay. And we have been exploring...
Worked hard to get current account.
So either the low cost or focusing on alternative sources of finance. So refinance is one among them. We have gone for wherever eligible at a very good rates. Around 5,800 crores were raised in refinance from SIDBI alone.
Okay.
So those things are helping me maintain the NIM.
Okay, but nevertheless, the cost of deposits is an issue. Can you maintain it at 4.75 cost of deposits or 4.25, I think, cost of funds? Because your CD ratio is already gone above 80. So do you think now 3.98 is tough? You may have, give us a margin guidance.
So if you look at this particular financial year, I have absolutely no challenge to maintain this. Although my guidance has been 3.75 to 3.9, I have been maintaining well above my guidance for the last 4 quarters. Also for March, I don't have any issue. Yes, the rate cut, whenever that is happening, is likely to happen maybe coming in the next FY. So when the rate cut happens, I have around 37% of my loan book linked to repo. That will see an immediate reprice. But if you see again, 30 bips that I have raised in my MCLR linked loans, not all of them have got repriced. So this will come with the lag at the reset date. Okay. So that will, to a certain extent, take care of NIM getting this thing. But I will continue to maintain guidance of 3.75 to 3.9 for this year. For the next year, we will see, wait and watch, and then maybe come with a guidance number also.
Okay, fair enough. Let me come to the, the fact that your retail loans are 60%. What is your experience with unsecured? Is there a chance, SMA, aggregate SMA2 has gone up a bit. Is there any problem with unsecured loans?
So if you see...
Or will you continue with this 1.8 GNP?
Again here, no challenge. I don't see any immediate concerns or worry points for us. If you see on year-on-year basis, we have improved our SMA also, the stress book also. It has come down from 6.61, now it is 4.87. And talking about personal unsecured loans, it's a very small piece of my total loan book. The number is around 3,300 crores out of 2,30,000 crores. So it is 1.47%. Here also we are doing unsecured personal loans where we have salary tie-ups. So salaries are getting credited and my personal loans are getting service. I have absolutely no issues, concerns on stress building up here or anything. There are hardly any delinquencies as such, below 50 basis points.
Okay, now a question which I don't normally ask any other banker. Can you take us through how much buffer provisions you have? Because even this year, your NPA is hardly anything. I think your NPA provision was 1 crore. But your overall provision is 801 crore or something like that. What's your total buffer? And therefore, even if they are NPAs, say in FY26, you will continue to post this kind of profit?
See, yes, I think PCR, if you look at my PCR, it is a very high 98.3. And my aging provision requirements have actually gone down. But we are very, I should say, taking care of, these are the good times. We keep in mind nudges coming from the regulator that you need to, protect yourself for any down cycles in the times to come. So we are also looking at new draft guidelines are there for ECL, for the infrastructure segment. So we are already making some provisions over and above what the prescribed IRAC norms are, even on my standard advances. That is one contributing factor. And we are also creating buffer provisions for all these expected guidelines from the regulator.
So should we say that if ECL were to, get started off in April 25, what will be the impact on your balance sheet? You will not have a profit hit?
I will not have. I'll tell you the numbers are there. We have been tracking this also. If you look at the ECL provisions, my requirement are going to come around 2,500 crores. So if 2,500 crores, RBI is going to give us a dispensation of 5 years. So on a quarter basis, 125 to 150 crores is what we expect to be making additional provisions for ECL. I'm already, for the last 3 quarters, I've been building up that 150. I have absolutely no challenge in carving out that 125.
Okay, no, that's a very confident message for the investors. But speaking of which, your profit is what, 2,800 crores for the first quarter? I mean, for the first half. I mean, I think you're in target for 5,500 for the full year.
Absolutely. If you see, my last year was 4,055 for the year as a whole. I've already done 4,027 in the 9 months. So the last quarter definitely will be much more than 1,400. So we had a target of 5,000 crores. We will cross 5,500 very easily. Very easily.
Can you give us a range then, rather than me give you a number? And moreover, next year, even if I take 25% profit growth, I mean, this year, this quarter, you're doing 36% profit growth.
Yeah.
So even if I take 25%, you should be somewhere near 7,000 crores.
So I will not just say that number, but yes, we are very adequately placed. We had 5,000 number when we began the year, but the way things have gone in the first 3 quarters, I think we will be surprising ourselves, the market also, with posting good results and good profitability also.
That's very good to hear. That's extremely good to hear. That's Bank of Maharashtra. Up only 1% today, but that's because a lot of the good news is already in the price. Unfortunately, out of time, we will invite Mr. Saxena again for a longer chat. We'll wrap up on Bazaar. Chartbusters coming.